up.
Okay, Amnish, stay with us. We have Sanjay Manyal who joins us as well. Hi, Sanjay. Thanks so much for joining in. Well, the first look at it, the margins are under pressure. The management commentary as well suggests that we're in for pain for a couple of more quarters as well. Your first take on the numbers from here on?
Yeah, as far as revenue growth is concerned, largely what we were expecting and what we believe that the growth is largely came from the pricing part. Volume would have been a smaller part of the growth, and that too from the Maggi portfolio. As I think it is expected that all the raw material prices, whether it is milk or for that matter crude-based packaging material, all have gone up sharply in last 6-8 months, and that would reflect across FMCG companies. And though I think Nestle's overall raw material basket is more skewed towards the agri side of the commodities rather than the crude and the the palm, which probably is a bit of solace, but I believe still Nestle would also see the margin pressure probably one more quarter. Yeah.
We take your point, Sanjay. There is a fair amount of skew towards the agri side of things, and that's what is seeing some inflation now, given the Russia-Ukraine crisis as well, and milk procurement prices themselves have increased, as the management indicates. So I'm looking at their categories, prepared dishes and cooking aids, which includes Maggi, etc. That's done well. The company says strong growth momentum continued in noodles, aided by media as well as mega portfolio activation. That explains why the other expenses are slightly higher year on year. Milk products and nutrition. Milk products continue to face challenges from competition. So that is one place where margins could face some pressure going forward as well, given milk procurement prices are increasing and they might not be able to pass it on given they are facing competition. Confectionery has been doing well for them over the last few quarters, and now that things are opening up, KitKat and Nestle Munch will continue to do well. They have both registered double-digit growth. And we're seeing, Nescafe Classic and Sunrise both delivering double-digit growth. So there's no real problem on the top line. The worry is the EBITDA as well as the bottom line. In light of that and the kind of valuations that the stock trades at, what are your thoughts? What's your call?
So we have a hold rating on Nestle, I think, and we will continue. I think we'll continue with the similar kind of rating. But as I think told you, the margin pressure will probably continue for another 1 or 2 quarters. But we need to see one thing which we probably believe that earlier during the first wave of COVID and even a few quarters after that, they faced a challenge in the from the volume side in the prepared dishes segment, where demand was high but the capacities were not full. But I think after the Sanand facility, that problem is solved, and probably Maggi volume growth still would be positive, but rest of the other portfolio probably will be facing challenges even from the volume side.
Right, and final point to Amnish then. Amnish, I'm just looking at the gross margins this time around 55.4%, and that's about a 300 basis points decline year on year. We are seeing a decline quarter on quarter as well. The gross margin bar chart should come up for you on the screen as we speak. You will know that, the raw material pressure is something that Nestle has been facing. 55.4%, that's at least a 5 to 6 quarter low. Last quarter was 57 odd percent, and the same time last year was 58.5 odd percent. Amnish, your call on the stock, your final thoughts, gross margin outlook, and valuations. It's not particularly cheap at 64 times.
Okay, you see, 2 things here. One being, as far as your gross margins are concerned, I think we have not seen the worst. Okay, and I think in the coming couple of quarters, we might see the gross margins coming eventually under more pressure. So a QQ decline in the gross margins for the next 1 or 2 quarters can't be ruled out. Now, as far as your volume growth is concerned, I think volume growth, we should not expect any miracles to happen, because in the price pointed packs at rupees 10, 5, etc., whether it is in chocolates, whether it is in Maggi, you might see your some sort of grammage reduction also. So that is one part of it. Now, as far as your valuations are concerned, I think, yes, I agree that stock remains, it's not at all a cheap stock, trading at around, say, if I look at CY23, close to 60 times. So I think the stocks will give you only back-ended returns. We have accumulate rating. So in the near to medium term, the stock may be more range-bound, and with, I think, the profit growth not being very encouraging in CY22, I think one should expect only the back-ended return.
Okay.
So no, I think immediate fireworks or any big upside is likely.
Okay, all right, Abneesh. Thanks so much for joining in and filling us in with your quick take, as well as Sanjay. Thanks so much for joining in as well. But we have Abneesh Roy of Edelweiss as well, who joins us. Hi, Abneesh. You have had a goodish bit, longer time duration to look at the numbers at least. Margins appear under pressure. They could be under pressure as well for the next couple of quarters. Your take on the numbers and how do you approach the stock from here on? Go ahead.
Yeah, this is the first result, so this points out how tough the quarter will be and possibly next quarter also in terms of margin. So that's one reason why food companies are clearly lower in terms of our pecking order. In our topic, we have got Tata Consumer, where tea prices, raw material is soft, and then we have ITC, HUL, and Asian Paints. Food companies currently will see the brunt because palm oil, wheat, milk, and packaging, everything is inflationary. The good part in this result clearly is almost 20-21% kind of growth on a 2-year basis on the revenue front, and a double-digit growth even in terms of YOY, which is, I think, a good thing. Going ahead, I think clearly with now mobility coming back, office is also coming back. Nestle obviously had a big impact last 2 years because office supplies were restricted, and travel also coming back. That's positive. And second is, in hyperinflationary times, the leader always gains market share. So I think now investors are looking for a rural recovery from H2 FY23. In that, larger companies like Nestle will benefit. So yes, from a next 1 to 2 quarters perspective, food companies will be lower in terms of pecking order because of more gross margin pressure. But this could be a good recovery play given urban consumption and the mobility coming back. So Nestle should be bought from a 1-year perspective. But yes, from a near-term perspective, we will prefer Tata Consumer and ITC and HUL.
All right, take that point, Abneesh. ITC at a 52-week high. Tata Consumer is in a deflation mode for its input costs, so stand to benefit out there as well. And HUL has underperformed the Nifty by almost 60% over the last couple of years. FMCG usually is a play of the second half of the year when we've seen the monsoons, we've seen festive season, etc. So that is something that we will monitor. Abneesh says that hold it for a year, and you might see returns in terms of growth in the second half of this year itself. Nestle at the low point of trade. With that, we head into a short break. And before we do that, here's something that you, our viewers, must take note of. CNBC TV18 and the National Stock Exchange